Gas prices in Europe already hit a record high earlier this month, and those Western sanctions are sending the prices of other commodities up. Wheat's nearly doubled from last year to an all-time high. Russia's the world's largest exporter. And 11% of the world's nickel also comes from Russia. The price, look at that. I mean, you can see it. So much so that the London Metal Exchange had to halt trading. Sergei Guriev is the professor of economics at Science Po. He joined other prominent Russian exiles to call for an end to the war. He joins me from Paris. Sir, Professor, how bad will the Russian economy be hit by the sanctions already offered, and much worse, of course, if oil's included?
Hi, Richard. Thank you very much for inviting me. Russian economy is in unprecedented situation. It's been hit by financial sanctions. It's being hit by trade sanctions. It's being hit by exodus of foreign investors who voluntarily decide to cut any links with Russia. The stock market has been closed for more than a week, and it will not reopen tomorrow. The currency lost virtually half its value. And indeed, as you rightly said, the main question, if there is a joint oil and gas embargo imposed not just by the US, but US, Europe, and possibly other nations.
So the question everyone wants to know is how long can this continue? Obviously, the economic condition makes people poorer, and there's greater hardship, and the value of money evaporates. Are you expecting to see hyperinflation in Russia?
Well, we expect to see a burst of inflation in the coming months. It's inevitable because there is a transmission from depreciation of the ruble into higher prices. Russia imports half of its consumer goods, food, medicines are all priced to dollar, and in that sense, inflation is coming. Various forecasts include minus 9% recession this year, and that's compared to plus 3% growth, which was forecast before the war. So it's going to be hit a lot. But the question is to what extent this hardship will translate into political implications. And for that, Mr. Putin has built a very impressive repressive apparatus, repressive and propaganda apparatus. And then the next question is whether he has money to pay his soldiers in Ukraine and his policemen in Russia to beat up unhappy Russians who protest. And that is the question of the oil embargo.
Okay, but to an extent, he can print his own cash. I mean, it may turn into worthless paper, but keeping the ATMs full and going through this fiction of we are paying salaries in worthless money, Weimar Republic type stuff, but he can provide cash for bills.
That's something that Mr. Putin has learned because he lived through 1990s, and many Russians have. And actually, if anything, he probably is unlikely to go through Weimar Republic kind of hyperinflation episode. He has a competent central bank at his side, which will probably let prices to rise once, but then will try to raise rates, which is already done, and control the inflation. So I won't expect hyperinflation, but I would expect really big shock against purchasing power of Russian households.
That's something that we've never seen any country be exposed to, I mean, of size. You could arguably say that there have been examples of smaller cases, but of size. We've never seen a systemically important country to the global economy on energy being hit with such sanctions. So what do you expect happens next? Give me a guidance, Professor. Where should I look for the fault lines in the Russian economy?
Well, Russian economy has been hit throughout. As you rightly said, it's a large economy, which is part of the global economy. It's interdependent with Europe. Europe is its biggest partner, but also with other countries. And every single company depends on imports and access to export market, depends on financing, and financial system is in big trouble. And as you rightly say, you can look at North Korea or Venezuela or Iran, but Russia has been part and parcel of global economy. So it's hit badly everywhere. And then the next question is the fallout for the other country. And of course, as you introduce this part of your program, the sanctions on Russia already show up in higher oil prices, higher metal prices, because Russia is an important player. But apparently the West is ready to accept this pain because the security risks of Russia winning the war in Europe are too high.